My name's Dave Hofferberth. I'm the founder and managing director of Service Performance Insight. I've been covering the professional services market for almost 30 years with both the Aberdeen Group and SPI Research. SPI Research is a leading global authority covering the professional services, and where we specialize is in benchmarking organizations like yours to help you improve performance. We've had over 8,000 firms participate in our annual benchmark over the last 18 years, and we'll begin the 19th annual benchmark here later this week. Today, I'm going to discuss a few of the market trends impacting the professional services market, discuss with you the professional services maturity benchmark, which is core to everything we do, and then, of course, talk a little about artificial intelligence and how it's impacting the market today. I'll wrap it up. A couple things that have really changed over the past literally 2 decades, and especially over the past 5 years, and that's accelerated technology adoption and the rise of the remote workforce. Well, of course, we've all seen changes in technology from client server to SaaS in the cloud, and now we enter an age of artificial intelligence. It's escalating faster than we've ever seen before. And you throw in the fact that 5 years ago we had COVID, which forced everyone to work remotely. And you can see how these changes have impacted the technology market as providers have had to do more to help their professional services customers perform at higher levels. There's no doubt 2024 was a difficult year in the professional services market. We saw 4.6% growth last year, and that is the lowest we've ever seen. And it was on top of a year where we only grew at 7.8% the prior year. We expect professional services organizations to grow at around 10% or higher every year. So these past 2 years have been difficult. Likewise, we saw billable utilization, one of the most important KPIs in professional services, decrease from 69 to 68% over the past 2 years. Again, we're looking for around 75% from your firms every year. On-time delivery, and I'll talk a little more about this later in today's presentation. We saw it drop to its lowest level in a long time, at less than 75%. Again, we would like firms to complete projects in 80% of the time or better. And you can just see this, all of these things ended us up with a profitability of less than 10%. Again, one of the lowest we've ever seen. And we expect profitability for your organizations to be around 15% or so. And I want to highlight these trends because I show year over year, and sometimes firms, look at the small changes from year to year and don't think much about it. But if you look at the past 5 years, again, the first year being COVID, 2020, you can see how things have fluctuated. And what we're really concerned with is billable utilization, on-time delivery, and of course, the impact those two KPIs have on the profitability of your organization. So it's areas that we want you to look at. We want you to manage and monitor so that you can better understand ways to improve what you're doing. And of course, every firm is not the same. Every market in professional services is not the same. We wanted to show you a graph to highlighting last year in terms of growth and profitability, because again, they're two of the most important KPIs, and we know that every one of your firms tracks those. You can see that on the far left, management consultancies actually had a reduction in revenue growth. So they shrunk over the past year, which we never see. And then you look down to the IT consultancies in that lower right quadrant. They usually grow the fastest and they usually have the highest levels of profitability. Last year, it just didn't happen. So when you compare your organization to benchmark data, make sure you're comparing your organization to like organization. So you need your peer group. You need the data to support your peer group. And so there's a lot of KPIs. I know that we track about 160 in this study, and we track 100 more in other studies that we do. And we try to break these down by our pillars or by areas within your organization, client-related factors, because new clients are important, making sure they're satisfied and happy, and retention rates are high. And then we have operational metrics, which include your ability to deliver services effectively with high levels of quality and, of course, on-time delivery. Very difficult to do. And then that all rolls into the financial KPIs for your organization, such as revenue growth and profit, but also, are you making your margin, your annual margin goals? Are you making your annual revenue goals? Are you losing money because you're not collecting all that you should? It's complicated. There's no doubt about it. And so taking a step back before we get into a lot of the KPIs, we see firms like yours focus on revenue growth and profit. That's what people talk about the most. But it's important at the end of the day that everything you do also supports your ability to drive higher levels of client satisfaction as well as employee satisfaction. And we call it employee optimization because it's utilizing your employees the best way to where they're satisfied with the type of work they're doing, what they're accomplishing. And so, again, these 4 areas you can never forget about. And in meetings every week, every month, every year, these are the 4 areas you have to discuss in order to improve. And with that, I'll take you to the professional services maturity model. We built this about 19 years ago, looking at professional services organizations like yours. And we broke an organization down into 5, what we call 5 pillars. The first is leadership, and that is how you communicate your strategy, give your employees confidence in the long-term future of the organization, and get out there and set the tone and strategy. Second is client relationships, and that's your ability to grow the organization, to have satisfied clients and partners as well, winning bids, building backlog, and so forth. The third is talent. That's the central pillar in our maturity model, and that is where your employees are. This is so important because you only succeed with good employees and the right amount of good employees. And then, of course, service execution, taking what you're selling, taking the employee base and delivering. And this is where you make money in professional services. This is so important because it supports everything you do going forward. And then the last pillar is finance and operations, and that's collecting money, making sure you're achieving your goals for margin, for revenue per consultant, revenue per employee, and other areas. So with those 5 pillars, each of them we evaluate on a scale of 1 to 5, similar to the capability maturity model, where 1 is, we call it heroic. And this is where your organization is working hard, but you're inefficient. You might have 5 people working on the same exact thing at the same exact time in 5 different areas of the world. And so it's important for your organization to work together to make sure that everyone is aligned. And so as you get better alignment, as you get better responsibilities, and you standardize your business processes and you collect better information on projects and so forth, you move up in the maturity level. Only 5% hit our top level, which is called optimize. And these are the organizations that not only do everything well today, but have got the systems and structure in place to succeed over the long run. Again, very few organizations achieve this level. And so what's important about this? Well, we built the model to show that your organization is interconnected. There's no doubt you have different areas within the organization. You have people responsible for marketing and sales, people responsibility for hiring the right people, and then, of course, people delivering projects. And the point is, all of these areas have to work together. The communication has to be excellent because your leaders set the strategy, and sales and marketing go out and deliver on that strategy. And of course, your head of HR has to hire those people that can deliver those projects. And again, overhiring, underhiring, it's complicated. There's no doubt about it. No company does it perfectly. And so they're always looking to see what is the work that's being done and what kind of people you need. And that's, of course, why we call the service execution so important in professional services. Companies like yours have to manage your resources, have to optimize scheduling, and deliver on time, on budget, with high levels of quality. And hopefully you make money out of it that you can invest back in the organization to help you grow. And of course, what's really changed over the past really 2 years is AI and how it's impacting your organization. There's no doubt that the AI is now starting to look at all of the data that professional services firms have to help them achieve their goals and objectives. And it's just something that's always working in the background, trying to help you figure out ways to improve performance. It's just starting, and I hope all of you are, learning as much as you can and starting to embrace the technology, because it's here, and everyone, probably the successful firms, will do well tracking it. And of course, people hear what I say about maturity levels and working together, and it all sounds great. But the fact is, there is some method behind the madness. You can see on this chart how firms that move from level 1 to level 2 and up the ladder, how their performance improves. And if you want to look at the top line about year-over-year change in revenue, or the bottom line about profitability, you can appreciate how important it is to achieve high levels of performance. And of course, you don't grow and you don't make a lot of money on its own. You make it by doing everything else really well. So it's building your pipeline, winning bids, building backlog. It's achieving high levels of billable utilization and delivering projects on time, on budget, with high margin. You can see if you do all those things well, you will succeed over the long run. And I'll get into a couple examples in later slides on why that's important. And so when we work with firms, we have this concept called getting the red out. And you can see on the right, the level 1 through level 5 columns. We look at firms and we find the areas where they perform the least effective. And you can see in this particular example, year-over-year change in revenue. Okay, they're not achieving high levels of revenue growth, and that's okay. They've got to fix things to improve. So we look at the areas where they can improve. And so, for instance, they need to build pipeline and they need to win more bids. How do you do that? Well, you improve the services you're offering. You improve your capabilities in sales and marketing to improve. Likewise, revenue per consultant and revenue per employee down at the bottom, they're level 1, level 2. So basically, they're less than half of the firms they are targeted against. So how do you improve those areas? There's a lot of work involved in that, and that's a whole consulting session in its own. But if you don't know where you underperform, you really don't know the areas to address. If you don't have the information, you have no idea where you're going to work first to improve. And so I wanted to get into a couple KPIs that are very important in your organization. The first is billable utilization. You hear about it all the time. We get a lot of comments and questions about what exactly is billable utilization and how we define it and how you should define it. And I would say that every firm might define it a little differently themselves. But the way we define it is we base it on a 2,000 hour year. So if your billable utilization is over 80%, that means your people on average are billing about 1,600 hours a year or more. So you think of your senior level consultants who charge a lot of money, but they may not bill that many hours a year because they're busy managing projects, managing clients, and maybe helping you sell more services. So they may bill 500 hours a year, but your junior level consultants, they may bill 2,000 or 2,200 hours a year. At the end of the day, you take all of those hours billed by all the consultants to come up with a billable utilization. And this slide shows the importance of that, of how organizations like yours grow, how they deliver on time, on budget, how they make a lot more money, and so forth. Most of the KPIs improve as billable utilization improves, and it's an area that your organization has to look at. And it begins with hiring the right people with the right skills. Because if you have too many consultants with a skill and they're not billable, you're already in trouble. This isn't easy to do, by the way. This is difficult. But if somebody has to always look at what services are in demand, what types of people, are they high skill, are they lower skilled? Again, it comes down to cost and margin and so forth. So it's not an easy thing to do, but we work with firms to help them improve that. Likewise, on-time delivery. It's one of my favorite KPIs because it really impacts everything. First and foremost, if you're delivering on time, that means you can start the next project. Therefore, you can grow revenue and probably make more money that way. But also, what's so important about this KPI is that on-time delivery leads to higher client satisfaction, and higher client satisfaction tends to influence higher employee satisfaction. Nobody likes it when the clients are not happy with what's going on. And so it's real important to work together in professional services to achieve on-time delivery. This chart is just one of the areas showing how this is impacted. And again, I like things like margin, and I like things like profitability. And you can see on-time delivery, how that impacts your organization going forward. Focusing on project margin is important. Again, this is the money you make that you can use to invest any way you like, whether it's paying shareholders, it's investing in new practices, it's investing in training, what have you. If you're not making margin, your firm is in a lot of trouble. And so the organizations that do this do a really good job of hiring the right people with the right skills so that they are billable, so that they do make good margin per consultant, and so forth. And it's tough. It's tough to hire good people these days. We know that. Also, building a plan, a project plan, and scheduling the resources. Make sure you have the right amount of people with the right skills to succeed. And then maximizing billable utilization once you start. You've got to get the people, you've got to have them working on projects. Remote service delivery is really helped in this respect because your consultants might be able to work on more than one project at the same time in the same day, and that really helps. But also using third-party resources, we find is very important. In our surveys, and we've done this 18 years in a row, the percentage of third-party resources organizations like yours use is between 10 and 15% every year. So take advantage of them because you can use them when you need them, but you don't have to use them when you don't need them. And then finally, again, I've said it, on time, on budget delivery. Without it, you don't make the margins your organization is looking for. So I wanted to get into AI because there's no doubt you're going to hear a lot about it. You've been hearing a lot about it over the past, especially 2 to 3 years. So a year ago, we did a study on the impact of artificial intelligence in professional services. And we found that organizations like yours, again, really didn't know as much about it a year ago as they do today and how it would impact the organization going forward. And as you can see from this slide, the area that they most thought it would impact is service execution. So we're real happy with that because, again, that's where you make money. If you watch all of the business channels on television, you hear about it improving talent. So, for instance, helping hire new employees, training new employees, monitoring their success, and so forth. You hear about it helping to helping client relations, helping to plan marketing campaigns and achieve, advertising and all those areas. But when and maybe those are true, but in professional services, we found service execution, the ability to deliver services, is the area that you are expecting AI to help the most. And so there's a lot you can take advantage of this in the market today. But here's what you're saying today versus a year ago. Is it improving your organization? And you can see changes everywhere with the exception of client relationships. It went down a little. So it's not helping marketing and sales as much as they thought a year ago. That's fine. But look at the service execution row in red. It's incredible the changes that AI has brought to professional services compared to what they thought it was making a year ago. And that's real important for the market to understand. The study in 2025 is not over yet. We've got another week of surveying on it. So these are not final results, but there's no doubt that AI is having a great impact on professional services, especially with service delivery. And so where is it helping? We asked, where is it really helping on a 1 to 5 scale, 1 being disagree or strongly disagree, 5 being agree. And you can see corporate reporting, project management, which was very interesting, project risk, project accounting. You can see some of the changes in where they believe AI has helped their organization. And so, again, maybe your organization is ahead of the curve and you're already implementing AI in a number of areas. If you haven't, you really need to sit back and get some help on how you can use AI to improve performance, because the use cases are just starting to take off. And believe me, over the next year, 2 years, 5 years, we're going to see significant changes as a result of AI. And I tell you, most people are pretty happy with where they see the market going there. I would also like to say benchmarking. Again, we benchmark, so of course I think it's important. But if you don't know your performance today, how do you know where you're going to get better or where you're going to get worse? And so it's important because there's so many areas in your organization that benchmark helps. And so you take the numbers from your organization, and it may be 20 KPIs, it may be 120 KPIs, but you compare those to, for instance, our benchmark, our annual benchmark, to see how you're performing. It's an easy way to look for areas of improvement. And we talk to executives all the time, and many of them don't look at that many key performance indicators other than the most important. But we work with them to make sure if there are areas they need to benchmark to better understand and improve, they get going on it. And so I'd like to thank everybody for attending. I know I talk fast, but there's so much I could say about this. And so, a couple things. This has been a turbulent 5 years. Few would argue that we started with COVID and we didn't know where the world was going. And we ended up the past couple of years with a lot of market turbulence, uncertainty, higher interest rates. There's so many things going on. But we see better days ahead for organizations like yours. And then the second is workforce engagement. Your workforce is the most important part of professional services. It's an exciting market because it's people-based versus machine-based versus something else. And so making sure you have the right people, making sure you have the right people with the right skills are very important. You can't overhire, you can't underhire. You've got to do a great job of forecasting, not easy to do, your sales, your deliverables, and therefore you can hire and train much better. And of course, you want to retain these great employees. And most firms, when I started talking about this 20 years ago, very few professional services firms really took advantage of technology. Well, they are today, and our annual benchmark shows adoption levels at their highest point ever. And it's those KPIs that they're monitoring, measuring, and analyzing to help their organizations improve going forward. If you don't have the information, you have no idea where to start. So I'd like to thank you for attending today's webinar. This week, we will kick off the 19th annual Professional Services Maturity Benchmark. You can go to www.spiresearch.com and click on a link to get to that survey. And we've done this a long time. If you complete the survey, you receive a report, and it's usually about 250 pages. But this year we're doing something different. If you complete the survey, we'll send you a scorecard on your organization and where you are, what levels you are in each of the 5 pillars. And it'll help you better understand your planning going forward. And then we'll also give you a 10-page executive summary, because most executives don't want to read a 250-page report, but they can go through 10 pages to better understand what they should be doing to help their organization achieve greater levels of performance. So I want to thank you very much again, and hopefully you'll tune in for the next Services Week.